And so that kind of leads me into the next sort of area, which is the whole concept of tax returns. And ensuring that trustees recognize that just like you and I, Angela, trusts are legal entities, and they do what we do, including pay taxes, unfortunately. And the responsibility for managing the trust and the taxation elements is on the trustee. And recognizing that those trusts are considered separate taxpayers and need to file those returns annually. The one distinction between you and I, Angela, and a trust is that you and I file what we call a T1 return. A trust files what we call a T3 return. And whatever income is earned in that trust is subject to tax. Just like how you and I earn income and we're subject to tax. Um, much like us as well, a trust is able to deduct its income or from its income any sort of reasonable expenses that it incurs in managing that trust. And that's again why it's important for a trustee to keep really good records. Now, one final responsibility of the trustee from a tax perspective is again the need for that trustee to apply for a final clearance certificate from Revenue Canada when the trust is wound up. And this is basically a document that the Revenue Canada provides that tells the trustee that all the taxes that are due and owing by that trust have been paid and that the trustee is no longer liable and responsible and that it's okay for them to now wind up the trust and disperse those funds to those ultimate beneficiaries. Not having that clearance certificate is a risk for a trustee because if they don't have a clearance certificate and they disperse to those ultimate beneficiaries and now there are no funds left to deal with Revenue Canada's tax duties, the trustee themselves might now be responsible personally for those taxes.